Right. Morning.
Yep. Morning.
Right.
Thanks for having me.
Yeah, we've actually had many chats about this. So I guess for the sake of everybody in the audience, maybe tell us a little bit more about, in context, about what exactly Cumberland does, and what's Cumberland's place in the blockchain or in the crypto industry right now.
Yeah. So just to give people the context, so you understand the angle that we're coming from over here. Cumberland is a OTC crypto trading firm. It's a market maker. We're one of the largest trading firms in the world, and we're actually part of a proprietary trading firm called DRW that's been around for about 26 years. So DRW has 900 people, and in 2014, they formed Cumberland to trade cryptos. And so a lot of the players in the space today, whether it's large funds, miners, ICOs, even exchanges, they'll come to us and buy and sell crypto and be able to, we'll be able to settle in a professional manner. I think what we do is we bring the processes of professional regulated markets into this industry. So at least there's a standard and professionalism that make people comfortable. And I think on that note, one of the benefits and the reason I think that Gabe invited me up here today is that as a large player in the space, we do have the pleasure of having really interesting conversations with some of the most established companies in the world that are looking at crypto. So that's what we're going to talk a little bit about today.
And maybe a little bit more about as well in that context as well. So what exactly is your role in Asia here for Cumberland as well?
So actually my background for the past 10 years has been a professional money manager. So I've been a trader almost my whole life. Before Cumberland, I was actually part of DRW, trading FX and interest rates for them in our Singapore office. I had the luxury of transferring internally to help start the Cumberland business in Asia a year ago. Before that, I was in Hong Kong trading FX and rates for a giant hedge fund called Citadel. So we do take positions in the market. What Cumberland does is we act as a proprietary trading firm and a principal trader. So we're not a broker. People will come to us and buy and sell. We'll take those positions directly into our book. And it's our job as the traders to work out of those positions and try to make a profit. We also take directional views in the market also. So most of our trading team, like myself, are comprised of professional traders.
So I think, Justin and I basically, we've had multiple chats, like basically talking about what we're going to talk about on stage and everything as well. And that conversation changed quite a bit, even to like this morning when both of us were both in the room and everything. So basically, based on that note, can you tell us everything we both discussed, just share with the audience as well, is that what are some of the top-down, high-level conversations people actually, that happens inside Cumberland, especially given everything that's happened literally in the last, 2-3 weeks in the market and everything as well. And on that note as well, to get some context to the question, it's that the price of crypto, is it representative of the future, essentially?
It's a very good question. Well, one of the things that's interesting about us is we have about 15 lawyers and compliance personnel internally to help direct our business. So how we structure the business, how we operate, a lot of it has to be reviewed by legal. In fact, even if I were to come and speak here, the waivers, for example, our legal team has to look it over. So as a big company, there's a process in place, which I appreciate because it helps me have more comfortable in the direction of the business. In terms of the discussions we have, there's obviously a lot of discussions inside the business about how we operate it. Usually it revolves around risk management, trading, and the technology we use to trade. So encouraging aspect for a lot of the people here, I would say, is that when you do operate in the crypto markets, they're highly volatile. Liquidity can dry up very quickly. So you want to understand your risk and the risks that you have outstanding. You want to have proper systems in place to make sure you're not rolling the dice, you're not caught off guard. Trading can be very difficult, and obviously, making sure that you have an edge, as we like to call it, is paramount. Otherwise, you'll be losing money. Nobody wants to trade to lose money.
Yeah, you also say that trading is very difficult. So what exactly if trading is so difficult and everything, there are a lot of trading firms, even just in Singapore, right? So what sets you guys apart from everybody else? Besides the fact that you guys are huge and famous, right? But as a business, what really sets you guys apart from everybody else on that?
I like to think it's the personnel and the quality of the personnel. I think the firm will probably say it's the technology. All of our systems are built in-house, so we don't actually outsource anything, and DRW has 900 people, as I mentioned, so a lot of these guys are programmers. A lot of the systems we use are legacy. They're used in our interest rates or FX or options business, and we just modify them to operate in the crypto space. And so I think what we're going to see in the next year or two is that as more professional money managers enter the crypto world, they'll bring in these kind of solutions with them. So instead of logging into a GUI and trading on an exchange, you'll have an aggregator or system that brings all that data feed to you and it'll compute metrics and statistics live. So that's something we have. Just a joke, someone asked me that question before. So what differentiates us? The number of screens that I'm looking at every day. I've got 5 big ones. No, but I think that's part of it is certainly the technology and making sure you understand, not taking too much risk, not having positions that are overly leveraged, and exposing yourself to margin calls, et cetera, especially when an asset class, the volatility dies down. As we saw in Bitcoin, and I think it was in October, Bitcoin just moved in like $100 or $200 range. It was actually not very volatile. And then of course that changed very quickly. So just not becoming complacent is very important, and that comes from experience. And as I mentioned earlier, I think the quality of the personnel, I was joking about it, but I think it does make a difference. Guys like myself who spent your careers looking at screens, looking at prices tick, will understand better how to minimize your exposure so that you actually are risk managing and not risk taking. I think that's a big differentiator, is that people look at crypto as an opportunity to make a ton of money. They want to take a lot of risk. The way I look at it is I want to mitigate risk. I want to make sure that my risks are lower so that there's a higher propensity for quality profits in the future.
So it's also kind of like an educational process as well.
Definitely, yeah.
Yeah, but at the same time, I would say that it's like besides all this potential and everything, regulations potentially will also play a part in something like that as well, right?
Yeah.
In the future.
Yeah, I mean, I think regulation is really important, and I always look at it as operators in the crypto world, especially those who are trading. There's obviously the market risk, which we are happy to take. We take fairly large positions. And then there's the regulatory risk and the operational risk. And the operational risk would be how you're running your business, some of the systems that I mentioned earlier, your counterparty risk, who are you trading with? Are you trading with Cumberland or other people, et cetera? Is it some guy who you're sending your crypto first to, and then he's going to say he's going to give you money in the future? And then there's the regulatory risk. For us, because we're such a large institution, US-based, our UBO, Ultimate Beneficial Owner, Mr. Don Wilson, he's a domiciled American. Regulatory risk for us has to be the absolute minimum. And so the legal team, the compliance team, they will make sure that we are not overexposed there at the expense of operationalists. So if you actually look at the details of how we run our trading business, our OTC business, we actually may be exposed to more risk than other players in the space, because we have to be in order to mitigate that regulatory risk. And I think that's a lesson for all of us in this space going forward, is that especially with the news in the last week or so, right, with the SEC and the DOJ, more and more going forward, we're going to have to be cognizant about the regulatory risk we're all taking and try to minimize that for a sustainable future in this space, both in our business as well as for the industry as a whole.
But the legal fallback, essentially, having that legal backing actually would help take the industry forward.
Certainly. I think that developments in the long term are very positive. But what it'll do in the short term is that it may put a slight weight on the industry as they start to cleanse the system. But it should be very positive for the long term.
Sure. All right. Let's talk a little bit more about the industry. So it's like, currently, where do things stand? Like, what should people focus on? Like, essentially, call it winter is here, to quote Game of Thrones, but like, where should the focus really be? Like, how can we ensure kind of like mid to long-term success in a way, or sustainability, I would say?
I think one of the really exciting parts of this industry, and that kind of pulled me towards it, is the energy amongst the technologists and the entrepreneurs who've come in to create potentially viable solutions in the future. For those who are involved in the technology, not guys like myself, they play a huge part, making sure they're staying ahead of the curve. They've got brilliant ideas, blockchain, DLT, solving real-world problems like KYC solutions. Every time, I'll give you a funny story. I actually applied for a new credit card recently with my main bank in Singapore. Now they have all my details already. And I went on their website, and it just popped up that they had this great deal, and I submitted it. And then I got a letter in the mail saying I was rejected, and they needed proof of address. And I kind of laughed, because they are my proof of address. And the fact that they would come back to me and say they need a proof of address shows how disorganized that institution is. Now, if they had a DLT solution,
because you're not naturalized Singaporean. You're
right, but
foreign talent, right?
Well, I'm a PR in Singapore.
Yeah. Oh, you're PR in Singapore.
Yeah, they like me over there. Yeah.
Right? Do you tell everybody what the bank is?
I can't say the bank's name, so no. But it was ironic, because I would naturally produce a bank statement for proof of address anywhere. Yet they were asking me for that exact same thing. So in the case of blockchain-based KYC solutions, you wouldn't have this situation. You would just enable that bank, and they would have access to all that data immediately. For guys like ourselves who are professional liquidity providers, we play a different role in the space. Our job is to make sure that people can buy and sell cryptos in a safe manner, whether it's the current utility tokens, or in the future, potentially even security tokens as well. DRW is one of the largest traders in the CME and CBOE in traditional asset classes. And so we looked forward to being able to play that role continuously in this space going forward. So you need all these different participants to work together to bring the space forward. And so, I think other guys can also come into the space, and they can bring, like vendors, for example, they can bring technology and solutions that exist outside of crypto and blockchain into the space. Whether it's trading software, I think we're starting to see that now with a few people.
Yes.
More and more, you're going to see guys bringing solutions that already exist into the space, and that will help develop and evolve this ecosystem in a sustainable manner. So that's something that's really positive.
But it's also something where the industry also needs to be a little bit self-aware that a lot of this needs to be done, right?
Certainly. And I think when you see news like Fidelity, creating a custody solution, that sort of brand name, that trust, that's something, again, that encourages some of the non-crypto and non-blockchain entrepreneurs in the world to take this industry a little more seriously. They see that. They see Goldman Sachs investing into BitGo. They see the NYSE, New York Stock Exchange parent company called the ICE, creating an exchange called BACT, or ErisX, another regulated exchange, or soon to be regulated, working with TD Ameritrade, the largest online brokerage house in the US, entering this space. Again, all positives, and that people outside this ecosystem will look at that and say, oh, if these guys who are legitimate and big reputable players are putting their reputation on the line, perhaps I should look into it and take it a little more seriously. And so on that note, what we've kind of seen in our business lately in the last 2 months or so is a trend of large corporates and multinational organizations, established fintech companies, some of which are publicly traded, calling us up and saying, hey, we want to have a chat. And so we'll get on the phone and talk to these guys, talk to them a little bit about what we do, what we're seeing in this space, what's happening. And that's very positive because it shows us that they're looking at this space. Some of them are actually quite far along in creating their own crypto solution, which I was very surprised of. Again, these are, some of you might have their apps on your phone. And don't be surprised in the next sort of 6 to 12 months if all of a sudden they announce that they have their own crypto, and all of a sudden you pull up the app and in your wallet there's a crypto there. So I think that kind of positive development, and we'll try our best to work with them, whether it's providing liquidity in your token or sort of having a casual conversation on what's happening.
And all this development is irregardless the price of crypto.
Yeah, so I think that's a very important point. Obviously, it's been an extremely tough year for crypto, particularly in the last couple of months. I'll give you my perspective, maybe that'll help you guys understand a little more. As a professional trader, I need liquidity and I need volatility. The notional dollar value of crypto or any asset class is not necessarily that important if it doesn't have an underlying earnings stream. So if you look at a stock, you could say that, okay, a stock's trading at $10 versus 100. It means that the future earnings stream has diminished, that the company's not doing as well. For something like crypto or a currency, it doesn't really apply, or even gold, for example, a commodity, right? Whether crypto is at 4,000 or whether it's at 10 or 20,000, you can still trade it around. So from a dollar value of crypto standpoint, I just look at it as trading opportunities. The development of the ecosystem and what's happening in the backdrop is where I think people, for the long term, should be paying attention. I mean, obviously, as a trader, I have to pay attention to the price, right? It's part of my job is to trade and make money.
Yep.
But whether or not the industry is developing positively for the long term, I actually don't look at the price at all. It's irrelevant because what you need to know is what's happening in terms of infrastructure being developed, in terms of reputable players coming to the space, again, like Fidelity, and what's happening there to make this ecosystem a bit easier for institutional participants to come into the space. So that's where we should be focusing our attention if you really want to be in this space for the long term.
Right. And on that note, if you're talking about, we've covered quite a bit in actually a very, very short time and everything. It's kind of like related to the next debate, which we're doing as well. But with all of this movement, which you see and everything like that, what else can we expect? Like, we talked about institutional money, capital markets coming in, et cetera, right? I don't know what's gonna just to really give people a context, like if there are people inside in this audience right now, or people who are watching online right now, like if you have institutional money, family offices, etc., like how do we engage with you? What can you do? How does this whole thing start? Essentially, like where does the first, you say picking up the phone, but how does that actually happen, and what's the whole process actually like?
Yeah, I think first and foremost, when you look at large institutions or institutional money, whether it's a family office or they're a little bit more flexible. Let's take like an asset manager that's regulated. It's not so easy for them to come in and just say, oh, I want to buy Bitcoin because it's going up. They need to invest in regulated products. And so understanding that something like a regulated exchange that offers regulated futures, that's the positive conduit for a lot of these entrants into the space. But it also means that it gives the ability for entrants to short the space as well. So it's not necessarily like, oh, just because they come in, the market's going to fly. But more and more of these regulated solutions are certainly positive for the industry because it'll attract these financial institutions that can only operate in the regulated space. So that's first and foremost. I think secondly, for guys like us, all of us in this room, we can play our part in terms of helping educate them, show them that this space is developing in a responsible manner. We have to be responsible about things, right? Having proper legal teams, making sure you're doing things by the book is absolutely paramount. It's not only for your own good, but it's for the better of the industry. Because when you are a large regulated institution and you look at a developing space and you see behavior that would otherwise be unethical in your industry, you're going to stay away from that, right? And so, I think the message is for everybody here that there's a lot of quick money to be made in crypto. Try to stay away from that and focus on the long term and what is, sort of beneficial for everybody, and work together with other people as well. I think we always try to be as transparent as possible. Some people will look at us and say, oh, you're a huge trading house, you're the bad guy, you're a financial institution. I don't see it that way at all. I see it as we try to be responsible and share our knowledge and what we understand from what our legal team tells us about how to develop our business in a sustainable way. And so if I can share that with people, then I certainly will. And I think for those who are surrounding themselves with lawyers and engaging with regulators in a responsible way, should also try to dissipate that to the rest of the space. Because again, that's the only way we're going to help this space develop in a sustainable way and bring in sort of large institutional interest.
Understand. Right. I'm just going to ask one final question, and I think it's the most important question that really sets the scene. It's like, and I don't really want to ask like what's the price of crypto for the next 1 year and everything like that, because all of this is bullshit. It's like nobody really knows.
I can't answer that anyways.
Nobody can answer that, right? People will answer it, but they won't put their family, their house, and their goldfish behind it. But I want to like put things as an industry in context. If we both were to sit here on stage a year from now in Bangkok, Tokyo, or something like that, like, where do you think we'll be? What essentially would be the conversation we'll be having 12 months from now? We'll be talking about, the second rise is like, the night, like everybody talks about the dot-com bubble bursting and everything like that, the recovery and everything. Are we going to see the demise? Are we going to see the rise? Or are we just going to see a balance of the force in a way? What we're going to see essentially in the market, and what potentially would be a conversation will be happening 12 months from now?
Yeah, I think if you had asked me that question 2 weeks ago, I would have given you probably a slightly different answer. This space just moves so quickly. There's new news and information.
You can just ask every 2 weeks. It's fine.
You can ask me every 2 weeks. Yeah, you can ping me on Telegram. Well, let me comment first on what I would have said 2 weeks ago and why that may have changed slightly. A couple of weeks ago, again, when we last spoke, the conversations we've had at Cumberland in the last 2 months have been extremely constructive for the space. Again, large, publicly traded companies, CEOs calling us up, had a chat with a fella who has 50 million users looking to create his own crypto very, very soon. This is a product that is used commonly in the world today. I think more and more of these kind of conversations have been happening, not always with us, with other players in the space as well. The introduction of Fidelity's custody solution that's going to be regulated, a name, a brand that has trust and a reputation. It's just easier for people to go and deal with the Fidelity than with a custody solution they've never heard of. Whether or not technologically that solution is the best, sometimes it doesn't even matter. All these things I think were highly positive. The introduction of BACT and ErisX, as I mentioned, 2 new exchanges that are going to be regulated by US regulators. And so what that does is that people get excited about these ideas, but they don't come into play right away. It takes time. It takes time for a large institution to see this kind of news and say, as I said earlier, oh, maybe I should pay closer attention. From that, they go out and they retain a headhunter, and they try to hire some guys, maybe some of the people in this room. And then they build a team, and then they build a team, and then they go, and then they start to investigate and research in the space, but the space keeps changing, so they're not able to come up with a solution that fits their business line, let's call it asset management, right away. It takes 6 to 12 months. And so I would have thought that naturally by sometime the second half of next year, that's when you'd see more of the institutional interest into the space, because now they have the means to enter. And so that's a positive in this industry and something that I was looking forward to. I think recently in the last couple of weeks, things have taken a slight turn. It's not surprising at all that sort of US regulators, which are the most powerful global regulators out there, are now taking a stronger interest in this space and trying to do what is right to help it become sustainable. But what that'll do is that may sort of dampen the entrance of the new participants for a little bit longer, and so that may slow this institutionalization curve, as we call it internally at Cumberland. I don't know how long it may slow it by, potentially 6 to 12 months, but I think there's going to be opposing forces there. So I don't have a strong answer. I would say on the undertone, there's a lot of positive developments of reputable corporations and institutions looking to enter the space or entering the space as we speak. But again, that's going to be offset with some of the regulators taking a stronger stance, which may bring some negative headlines as well. So we have to pay attention to both and weigh for ourselves. In the long run that regulation is a positive thing. That in the backdrop, the infrastructure is being built and reputable institutions are entering the space. So the question always comes down to timing, right? I think it's pretty clear that in the long term, things are still positive, moving in the right direction. I just don't know how it's going to play out in the short term, which is, call it the next 12 months.
Or it could just simply be a case of growth through trials and tribulations.
Certainly it will be like that. And you saw that in the tech industry in the late 90s as well, right? You saw that with the penny stocks before that.
You spoke about Amazon taking 8 years to recover. People always forget that.
Very good example. Very good example, right? And Amazon, for the longest of time, didn't even have any net profit. They just kept building, kept gaining market share, and developing their solution.
Building sweatshops and everything.
Yeah, robotic sweatshops. Yeah.
All right. Anyway, actually, on that very good, on that note, actually, we're talking about like the growth of the market and sentiments of the market and everything like that. I think one of the things that's gotten everybody very, very excited over the last year and a half is actually, ICOs, right? Or, STOs and everything like that.